eBay reported fiscal 2022 fourth quarter results a couple of days ago, and I'm going to do a review. And of course, eBay is one of my top 23 stocks to buy for 2023. I'm going to update that recommendation in this video, so you're not going to want to miss out on that. So let's get right into it. So revenue decreased by 4% to 2.51 billion for eBay. Adjusted earnings per share increased by 2% to $1.07. Gross merchandise volume decreased by 12% to 18.2 billion. eBay does not own any of the inventory on the platform. It just brings together buyers and sellers and takes a transaction fee from that. That it calls gross merchandise volume, the overall spending on the platform. This was expected to come down after it boomed during the earlier stages of the pandemic, right? Economic reopening has meant that people are spending more money on away from home channels like restaurants and bars and theme parks and things like that, and less money online. So this decrease was to be expected. The good news is that eBay has increased its transaction take rate, the amount it takes from those transactions. So that increased to 13.8%. This was up from 12.6% in the fourth quarter of 2021 and has increased for four consecutive quarters. It's up for at least four consecutive quarters. It's up by more than 400 basis points since the increases started a little over 2 years ago. They were at around 9%. Now, I just did a video on Etsy, and Etsy's transaction take rate is 20%. So eBay has room to continue increasing this transaction take rate because the industry overall is becoming less competitive. They're making it more expensive for sellers. I'm talking Etsy, eBay, Shopify, Amazon. They're all raising fees on sellers, making it more expensive. So sellers, they can't look around and say, okay, I'm going to leave eBay and go here or go here. Regardless of where they go, they're going to face higher fees. And that's good for investors in companies like eBay and Etsy, but it's not good for sellers, obviously, because now you got to pay higher fees and that leaves less in your pocket. So you got to either say, okay, I'm going to accept lower profits or I'm going to raise prices, right? So it's got to be a decision that seller's going to make. Advertising revenue jumped by 19% to 319 million. This is another bright spot for these platforms, is that they're bringing millions of buyers onto the platform. So they said, hey, here's another way we can generate revenue is by selling advertising, and that's a high profit margin business right there. And that way we can make money off people who don't even buy anything. They just come and browse for 10, 15, 20 minutes, and we can show them several advertisements, and that way we generate money regardless whether they buy something or not. Free cash flow of 533 million in its most recent quarter was up by 43% from 372 million in the same quarter the prior year. This is what I love about eBay stock. It's got an asset-light business model. It doesn't need to continue investing large sums of money to increase profits, right? It all it needs to do is bring together buyers and sellers and make fees off of that business, right? Just continue to invest in the platform, invest in the security, invest in little things here and there. For instance, they invested in this authentication business to make sure that expensive items on the platform can be authenticated, and things like that that attract both sellers and buyers and give it this sort of little bit of an advantage there that makes their buyers and sellers sticky to the platform. And in that way they could just keep churning along these profits, these earnings, these cash flow without pouring in billions of dollars into the business. The company's forecasting revenue to be flat in the first quarter, still earnings per share to grow about 1.5%, but the gross merchandise value to decrease by 6.5%. That would be a sequential improvement from gross merchandise volume decreasing by 12% in the current quarter, and an improvement from revenue decreasing by 4% to turning flat. So improvements in two out of the three metrics forecasted. Overall, to answer the question if eBay stock remains one of my top 23 stocks to buy for 2023, and the answer is yes. This quarter, although it wasn't a great quarter, still reiterates my recommendation for eBay stock, right? I like the asset light business model. I like the fact that it's increasing the take rate and industry wide competition is decreasing. And I also like that eBay provides some protection against a potential economic slowdown in the middle or back half of the year, right? If people start to feel pinched and they're losing income, they could go to eBay more often to save money and buy used goods and maybe even go on the platform to sell some of the things that they've bought during the last couple of years to generate some income while they are looking for another job. So it does provide some risk reduction from an economic recession as well. That's partly a reason why I've included it in my top 23 stocks to buy for 2023. All right, so that's all I've got for this video. Thank you for watching. I really appreciate your viewership. I hope you'll come back again next time to see me for another video. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.